Hello, everyone. This is Jillian Verdun from JMV Financial Services, your profit strategist, bringing tips and tricks to improve your financial situation for the new year. Thank you again for joining us. Today, we get to talk about how to know if you should incorporate your business or not. I get this question all the time. At what point in time do I need to incorporate my business? And do I even need to? So today I'm going to give you a couple of tricks and tips on if you should incorporate your business or not. One of the first decisions you face as a new business owner is whether or not to incorporate the business. The biggest advantage of incorporating is limitations of your liability. Your responsibility for debts and other liabilities incurred by a corporation is generally limited to the asset of the business. Your personal assets are not usually at risk, although they can be exceptions to this general rule. The trade-off is that there is a cost to incorporate, and in some cases, tax consequences. So the question you ask is, should you incorporate? You might not need to incorporate. Depending on the size and the type of your business, liability may not be an issue, or it can be covered by insurance. If so, you can join millions of other business owners and operate as an unincorporated sole proprietor. If you do decide to incorporate, you'll face a choice of corporate forms. All offer limitations on your liability, but there are differences in taxes and other issues. So let's talk about those. C corporations. The traditional form of corporation is the C corporation. C corporations have the most flexibility in structuring ownerships and benefits, and most large companies operate in this form. The biggest drawback is double taxation. First, the corporation pays taxes on its profits, and then the profits are taxed again as they are paid to individual shareholders as dividends. S corporations and LLCs. Two other forms of corporations avoid this double taxation. S corporations and limited liability companies, also known as LLCs, both of these are called pass-through entities because there's no taxation at the corporate level. Instead, profit and losses are passed through to the shareholders and reported on their individual tax returns. S corporations have some ownership limitations, however. There can only be one class of stock, and there can't be more than 100 shareholders, none of whom can be foreigners. State-registered LLCs have become a popular choice for many businesses. They offer more flexible ownership than S corporations and certain tax advantages. Whether you're already in business or just starting out, choosing the right form of business is important. Even established businesses change from one form to another during their lifetime. Some companies use more than one type of corporation. For example, an LLC to hold the business's real estate and an S corporation for other operations. If you would like more detail on what type of entity you should be or considering being, you can contact your local attorney for guidance in choosing what works best for your business. We would like to thank you for listening today, and please follow us on your favorite podcast. Bye.